All right, folks, welcome to the channel. Always an honor and a privilege to be with you. I hope you're all doing great. Buckle up and strap in. I got a hard-hitting pull, no punches, no sugarcoating it, no rainbows and sunshine. I'm just going to give it to you and give it to you straight. And friends, buckle up and strap in. This one is becoming so shocking. I almost laugh at this stuff. It's like a built-in self-defense mechanism to wrap my head around what I got to unpackage for you guys today. My lovely viewers who I absolutely love and cherish. Thank you so much for being part of this channel. Staying centered and surrounded with like-minded people. Iron will sharpen iron. Aren't you glad that you're awake? Aren't you glad that you put the punch bowl down? That you stopped drinking the real estate Kool-Aid? As this one now is exhibiting extreme crash behavior. From the beginning, I warned. I said, listen, this one can't sustain itself. It was artificially produced. No organic growth. I had never seen anything like this. Even somebody who lived through the last Great Recession and housing crash leading the charge of that recession, this one's bigger and more market manipulation to pump it up. People drank the Kool-Aid. Casino climate was born. People now are in big trouble. Massive trouble. So again, congratulations. Like I said, if you're new, please subscribe right away. There's never been a more important time in history to get forward thinking, critical thinking, centered and surrounded with like-minded people, friends. Like I said, iron will sharpen iron. Our rewards in life are in direct proportion to our contribution. We have to contribute right now. It's very important that we save as many American lives as we can and raise awareness. So the realities are, friends, you've probably heard real estate is local. Some areas are going to behave differently. Some will crash faster, harder, quicker, maybe rebound faster. But everybody gets touched in potentially this next real estate downturn. Why, you ask? I'm about to tell you. Because this was the everything bubble, and not just a U.S. bubble, a global bubble. Every big economy in the world now is exhibiting the behavior that we are. This is very alarming. Many people are very unaware of the booms and busts that we've always had throughout history in the housing market. But every single time the U.S. housing market has displayed bubble behavior, not 1%, 2% of the time, 100% of the time, they've crashed. So it now becomes your area. Is it going to correct, recess, or get into depressionary levels? Today we're going to look at an area that I believe is at risk of depressionary levels of a downturn because they lost touch with the basic healthy fundamentals that are needed to support the type of growth they received. These big metro areas were so artificially pumped up during the crisis. Not for the crisis, we're not even talking today. And just because we have our masks off, it's not all rainbows and sunshine quite yet. The dust will settle. We will pay the piper, and there's going to be blowback from the stimulus. Even with the interest rate hikes just starting, we're already on the verge of collapsing the markets, and we're just getting started. To get inflation under control, we have to raise interest rates much higher than they're at now. And we can't even barely tolerate the ones that are happening at the moment. We've cooled off the housing market. And the challenge with this one is, friends, maybe we escaped a lot of this if we hadn't overheated the biggest asset class in the world. The U.S. housing market has the capability of collapsing our global economy. It is that big. That's why, as a real estate guy and a real estate professional, somebody who benefited from the euphoria, I just knew how significant and how serious this was. And like I've always said, I don't care if this time is different. The realities are we're in another bubble. It's not important how we got in the bubble. The realities are we're in one. So you have to acknowledge the elephant in the room. The first step of getting past a problem is admit there's a problem. The second step of recovering from that problem is acceptance. Just accept it. This is a bubble. It can't sustain itself. It's going to have blowback. So to drive our point home, we're going to travel to one of the areas that, one of the many, it's like throwing darts at a map. You're going to hit an area that's at massive crash risk, because these were areas that normally you wouldn't touch with a 10-foot pole, and they got red hot because land was cheap, builders moved in, drank the Kool-Aid, and tried to build houses as fast as they could build them, and now they're stuck on inventory, and every surrounding area now is going to suffer. And industry professionals continue to try to sugarcoat it. It's our job to sell your house. We're going to oversell it at times, at least try to flower it up as much as we can. We're going to look at a blatant example of that today to drive our point home. Then we're going to meet back here and get your guys' thoughts. Let's get started. All right, friends, before we take a look at today's featured property, let's get started with the neighborhood. As we can see here, we'll probably want to lock our doors and roll up our windows and avoid eye contact. The Phoenix, Arizona metro area has its share of riffraff. Just like every other metro in America, Phoenix was not immune to it as well. And just like basic gravity, what goes up must come down, and this area got way too red hot and no sound fundamentals supported their housing prices. Let's see how this property is trying to bill itself to get itself sold, and if they in fact even have a chance. And here we go, all in red shows us price reductions. Before I take us into the property, let's read what they're saying about it. Look no further. This charming 4-bedroom, 2-bath, single-level property is the one. Explore inside to discover a welcoming living area, showcasing tile flooring, neutral palette throughout, arched doorways, a delightful brick fireplace, the immaculate eat-in kitchen. Enjoy a good night's sleep after a long, busy day in the primary bedroom, featuring plush carpet in all the right places. Well, okay, I can't wait to take a look. Let's get started. Well, they definitely made it sound good. Now let's take a look at the actual property, and here we go. In the mid $300,000 range, you're gonna be in a neighborhood that falls a little bit short. Now, I understand as an agent, we have to make these properties sound as good as we can, but unfortunately sometimes there's just no sugarcoating it. And as buyers get more savvy and more savvy, the last thing they want to do is be sold some narrative and then walk into a property and feel like they're invading somebody's space who's already living in it. The only person, in my opinion, that would buy this property is in fact an investor that can look around all this clutter, somebody living in it, and just see if it pencils out or not. And I'm pretty sure this one's not going to pencil out, which we're going to get to here shortly. But the realities are, friends, if you're a first-time home buyer and I'm walking you through this house, you're going to want out of the house almost as soon as I get you in. First-time home buyers expect to see empty or staged homes. If someone's living in the home, we always feel like we're invading somebody's home. We feel like a visitor, a guest. We don't feel like we're touring. We feel like we're in somebody else's house. And that's why it's so important anytime when we're selling a house, if we can't provide that level of service to our showings, if we can't empty the house and stage it, there's only one thing that'll get this house sold. It will be price. You are going to have to price very aggressively. Unfortunately, many people got spoiled in this market and thought they could come on at any number they want, no matter how the property showed, and it's clearly not working anymore. And areas like Phoenix and many, many others got too red hot, couldn't sustain themselves, and now are faced with an ultimate reality of there's no way these properties are going to be able to sell for even close to what they once were. It's going to provide massive, massive blowback. So again, the property clearly doesn't show well. It is what it is. There's no sugarcoating it. Like I said, for me, I would just go ahead in its description. House is occupied, doesn't show its best, lots of potential if it pencils out for the right investor. It could be great income property, whatever you have to do, but don't sugarcoat it and tell us how immaculate and what a great house is when clearly it is not. Now let's take a look at the numbers so we can really see what's going on with this thing. And first off, we can see it's currently priced at $339,000, already having gone through its first price change. My guess is it's probably going to have many more to come simply by the way the property shows. Who is going to race over and want to buy this property? The area is rough. The house is rough. Everything is rough. And as we can see here, pre-pandemic pricing is about half of where they're at now. And like I've reported before, don't be surprised if you see 50% off of homes by the time the dust settles in this crisis. And I believe, in fact, that's what we're headed for in this area and many others. Let's get back to the studio and wrap this one up. All right, friends, welcome back. Shocking footage. Would you live there? I don't think you could pay me. I don't think you could pay me to live in that area. Are you kidding me? I mean, what? I've always said, I'd rather be happy making less money than miserable making more. There's no sugarcoating Phoenix, Arizona. I'm sorry. This place is in massive, massive trouble. I believe we're going to see prices not only there in almost every single local housing market in America that behave the same or similar as Phoenix. They're going to experience the same exact thing. We're coming back to pre-pandemic levels. We'll be lucky if we escape this recession without a full-blown economic depression. I know that's in the conversation. I've warned on that myself. If I was a betting man, which I'm not, my money would probably go on. We're going to hit a depression simply because the data shows us that the historical data of depressionary cycles have come approximately every 80 to 100 years, and we're in the depression cycle now, and we delivered the perfect storm. I mean, come on. That's just the reality. So some areas are going to maybe get out of this with a correction, others with a recessionary level of a downturn, and some with a depressionary level of a downturn. And I think we looked at an area today that's at risk of depressionary levels of a downturn. I believe we'll see prices, that house is going to go eventually for $100 and something thousand. It'll be pennies on the dollar. It will be half price homes. I've reported on this before. It's becoming prophetic. It's almost guaranteed at this point. And we're not even talking about the foreclosure crisis yet. The foreclosure crisis is coming next. We're just getting started with interest rate hikes spooking these markets. Can you imagine a year from today if we're talking about the foreclosure crisis because all the people that bought in the pandemic era above and beyond appraised values can no longer afford those homes because one of the dual income members of that household lost their job, was laid off, or simply decided this thing's so upside down now, why hang on to it? Why continue to make a payment on a house that'll probably never be worth what I paid for it? And if it is, it's going to take 10 or 20 years based on previous crashes. That's what happened in the '08 crash. If you bought in the height of that one, it was a minimum of 10 years before it got back to break-even numbers. So you were making a payment on an upside-down asset for a long, long time before it came back. Insane to me. In final thoughts, I come to you as a friend, as a content creator. Somebody wants to see not only win in real estate, win in life. Understanding the waters we're swimming in. The biggest housing bubble ever artificially produced in history could not sustain itself. We looked at another example today. We're going to ring the bell and sound the alarm, read between the lines and look between the cracks so we can examine the health of the U.S. housing market. So if and when it displays its full-blown blowback, we're not as paralyzed by fear because we halfway saw it coming. We can operate within it more efficiently. The heavy hitters got on the sidelines a long time ago. I know many of you did too. Present company included. We're going to be able to go find a lot of deals, but right now I believe the number one thing we can do is let the dust settle from the artificial economy and make sure our basic needs are met, and then allocate a certain amount of funds to go re-enter these markets. You won't time the bottom. We certainly time the top. It's when you see all never seen before in highs start to reverse course and go the opposite direction. We've identified the top of the biggest real estate bubble ever recorded in history. Congratulations. Now we're going to see how the dust settles and which areas are showing the most significant pain, but I believe we're close. I believe within a year from today, we're going to see the bottom of this thing identify itself. Stay tuned as I do my best to identify it for you guys, because it's not only what you need, it's in fact what you deserve. If you appreciate the content, I do want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I would love to hear from you. Social media links are in the description of this video if you'd like to follow me there, along with links to channels I've supported or appeared on I think you might enjoy. If you're interested in buying or selling real estate here in America, I have an email in the description for you as well. I have a network of top-rated agents in the nation ready to assist you. It would be our honor and our privilege to serve you. Also, if you're watching from your television set today and you enjoyed this video, I know you're going to love the next video, and there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today. I'll see you on the next video.